Everybody hear me? Great. Well, first, Mike and Rob, thanks for inviting me to speak here with all of you today. I've had a chance to talk to a number of you, and I was really pleasantly surprised and feel really comfortable the fact that 10 years ago, all of you were where I was. There's I think a lot of things that I can tell you about some of the things that I did wrong, some of the things that I did right. So by telling you this story, I hope that you can leave this conference with some ideas so you can take your company, grow it up through millions of dollars, and eventually sell it. It's been a great experience, a wild ride, and so let's go get started. By the way, my Twitter handle is up here, my email. Feel free to contact me anytime. I really like giving advice. So here we go. And by the way, I also apologize for the, I can't get this full screen. It doesn't quite capture everything. It's my first time using Prezi. I don't know if you've ever used Prezi. It's kind of a cool presentation tool. So what we have here is kind of a snapshot of my business from when I started all the way through when I sold less than a year ago. And you can see, I started out, pretty humble, like my first year making $1,000 and $15,000 and all the way up through about $5 million in sales. And so lots of things happen along the way. I'm going to try to skip through some of it so I have time for questions. I should say that I've really split the evolution of my company in a few different phases. I said most of you are in the moonlighting phase. Can I have a show of hands who's moonlighting now, who has a full-time job? Okay, it's like half of you or more. I really think that that's a fantastic way to bootstrap a company. So I have some pointers there. And then, when you finally leave your job, your full-time job, and get started, that's really sort of my startup phase. Then growing beyond $1 million in revenue. I had the fortunate experience of going through a bad economy, such as I'm sure many of you have, and then eventually selling. So let's start with moonlighting. So, just a quick background about myself. I come from humble beginnings. I grew up in a sort of lower middle class family. My dad was a mechanic, and I aspired to design either cars or airplanes. And my dream came true. I got my degree in mechanical engineering, and I started with a company called Hamilton Sundstrand in Connecticut, designing aerospace systems for hydraulic systems for airplane engines. It was a cool job. I loved it. I had lots of responsibilities. Great place to work, by the way, United Technologies. But after a couple years, I got married, bought a house. I was kind of having trouble paying the bills. My credit card, for the first time, started racking up a little bit. And I thought to myself, well, how am I going to, I talked to my boss. He's like, there's really no way to get paid anymore. I was already making more than my peers. So I figured I'd take that on myself and try to make some extra money on the side. So instead of going back to my high school days of mowing lawns, I figured, let me go ahead and use some of the skills that I gained in my engineering job. So I sort of built this reputation of automating these basic tasks in my design work. So I'd build these tools to take the design of a spring that would take an engineer 2 weeks to make. I built a program that would do it in seconds. Just put in the parameters, hit a button, and you have a design of the spring. So they used that throughout the whole company. I taught myself Visual Basic and decided that I would take those skills and build a software product that I would sell. So this is around 99, 2000. Long story short, my father-in-law is an artist. I started building something for him so he could take his artwork, generate web pages and images, put it online. I realized that artists don't have any money. So I would take just one little piece of that, the batch image processor, and brought that to market. The screenshot is here. The website, which really looks awful on this screen, is right there. That was really when I got started in 2000. Ironically, the same time that I think David Collins got started doing Google AdWords. I'm sure I read a lot of his stuff back then because I was part of the industry or the Association of Shareware Professionals, and I learned how to drive people to my website and sell through e-commerce, really hands-off. And shortly after, in 2000, one, I made $15,000, which was great. I was thrilled that I was able to build something on my own time without putting any money in it and made some side income. Now, this is not enough to replace my salary, but it sort of gave me the bug of being an entrepreneur. So in building this program iBatch, I built a relationship with a third-party component vendor, this product called ImageX that did a lot of the back-end image processing. And I kept asking for so many features that the guy who owned it, Gary, started hiring me to add features for him. Then he invited me out to Microsoft at this component builders conference, where it totally opened my eyes to this huge ecosystem around developers of Microsoft technologies. And that was right around the time that people that know .NET. I know there's a few people out here that actually build their businesses on .NET. I was one. They put a huge marketing effort around this, and I really sort of drank the Kool-Aid and believed that this is going to be something big, and knew I wanted to build developer components for .NET developers. So shortly after I got back, 9/11 happened, aerospace industry tanked, they froze my salary, that kind of pissed me off. I decided that I would take it upon myself to build a business. Gary started to lose interest in his product, so I offered to buy it. And then right after, he sent me all of his financials and said, think that's a great idea. I had this other thing I'm working on. So I basically negotiated this is 2002. I negotiated, I think it was $25,000 plus maybe an extra $10,000 over the next year to buy his product. Already had customers. He was making about $40,000 a year, so it was a pretty good deal. Only problem was I didn't have any money. In fact, I was already in debt. My family didn't have any money. So the only thing that I had was credit. This is where the credit cards come in. Back then, it was a lot easier to get credit. I think I had about $35,000 of credit. I was already $10,000 in the hole. So what I did was I took 25 $1,000 cash advances, gave him the cash, had the IP. I had a really cheap lawyer write up the contract, and now I had a product that made $40,000 a year, and I had my shareware product that made $15,000 a year. And my goal, this is just for Visual Basic 6 developers, to improve this, build a business around that, and really get going with this company, because I was going to do this. Well, 1 month after I went in as much debt as I could possibly go into, I had a baby girl. She's shown I had to show the kids' pictures. I actually took this out of the presentation, but then that was a cool thing. I had to put it back in. Here they are now, my 10-year-old daughter and 6-year-old son. Anyway, so my daughter was born, and I kind of figured at that point what I wanted to do. I wanted to take ImageX and build a business sustainable enough so I could lead, but also be the first to the market with an imaging toolkit for .NET developers. In order to get there, I had to work my ass off. The 100-plus hours a week is no exaggeration. I would get up at 7, go to my engineering job. I would get home at like 6:30, spend maybe an hour with dinner, get back on the computer till 2, 2:30, sometimes 3 a.m. every single night for a full year. I will never, ever, ever do that again. I don't think it's humanly possible to do that more than a year, but that's kind of what it took. I can remember I was actually giving a meeting at my day job, and there was about like 6 of us in a conference room. And as soon as I was done, the conversation went to my boss. I fell asleep. So I knew at that point that it was about time. Fortunately, I made more money at Italisoft than I did as my engineering salary, so I was able to afford to leave. I formed Italisoft Inc. So when people ask me when was Italisoft founded, I usually say 2002. That's when I was really serious about it. And I left my engineering job, my 5-year anniversary, when my 401k was vested. So before I get to the next, I want to just kind of give you some takeaways about what I think makes can make you successful bootstrapping through moonlighting. I do think that that's probably, if you don't have cash in the bank for 1-2 years of your expenses, this is the way to go. Really, you should keep your day job, pay those bills, work on your product on the side, and focus on building revenue. Replace your income. It is possible. And through sophisticated marketing techniques. What I did 10 years ago isn't going to work now, but there are so many resources out there that it's certainly a good way to go. The other sort of key point is you really should leverage an existing community, existing framework, where there's a place you know where to market to. Don't be too broad. In my case, I was really focused on the Microsoft developer community. All the way through when I sold, I was always focused on the Microsoft developer community, and it worked for us. So you definitely want to take risks. I don't know any entrepreneurs that are pessimistic. You gotta really be optimistic, believe in yourself, believe in your intuition, and you need to be so passionate that people think you're nuts. I can certainly say that my friends thought I was crazy. My family thought I was crazy. Everyone did. I shared with them how I afforded to buy this company, and not many people have have what it takes, I suppose, to actually go in that much debt. But I will tell you that it's worth it. So next phase is really getting started. I told you I quit my job. I started hiring employees. I found one of my friends who didn't finish his comp sci degree. I started paying him $25,000 a year salary for the first few months. I know that's not something that's very feasible now. I happen to be in an area of Western Mass where there wasn't a lot of other software companies. It was in a downturn. He now is one of my top paid engineers at the company. So I ended up launching. I met my goal to launch the first imaging toolkit to the market for .NET developers later that year. And one of the key things that I learned is that we had to separate ourselves from the competition. One of the crazy things about this is, for those that know the imaging SDK industry, there's very established players out there. Fierce competition. This industry was saturated. And it really, if I look back at it, it was kind of stupid what I did. And if I look at my strategy now, I would say there's no way that you'll succeed, but I did. So really, sort of the takeaway here is, don't. If you're getting started, don't necessarily listen to advice. You can make it work as long as you're passionate about it. So I figured out that we had to establish a brand because we had such established competitors. So we went to our first trade show, Microsoft PDC, in 2003. We bought our first magazine ad, Visual Basic magazine, and really made a statement that you can trust us. We're a real company. We kind of were a real company, but we made it. I didn't exactly use the honesty approach here. I made ourselves look a little bigger than we really were. If they asked me how many employees you had, I lied. I think I said, depends on where we were. I think we were 4 people. I probably said we were 10. I didn't feel great about it. Maybe I didn't have to. If I listened to Jason and Peldy, that was a mistake. But so that year, we were growing pretty well. About 250,000 in sales. Just barely made it though. That trade show cost us about 20 grand. Barely could pay for it, but it got us what we needed. So 2004, we went to about 700,000 in sales. Just a key thing here, I really didn't know what the fuck I was doing. Really, really didn't. I started reading, and I started to figure out what it took to run a software development organization. I took one comp sci class. And there's this book here, Under Pressure on Time. It's a little dated now, but it totally revolutionized how I ran the company from an engineering point of view. Implemented automated builds and unit testing and all that good stuff. I also spent a lot of time automating our systems. We bought Salesforce.com back when they were just getting started. And I would spend all my evenings on systems work, just automating automatically messaging our customers to make it as hands-off as possible. I mean, that's what I was good at. And started to push more of the product development to the other people that I hired. The other key thing was you always have to differentiate. We differentiated in our pricing. So we came in pretty low cost, runtime royalty-free pricing. We're the only company that marketed ourselves that offered that. We really started looking at the web as something different, and we focused a lot of our energies there, which really led to the successful acquisition years later. So 2005, the significance here is that we hit $1 million in sales. I will tell you that it was a I was really, really happy with that. You know, when I started the company, I just kind of wanted a side income. I wanted to replace my normal income. I really didn't know that I could do this, but I did. And I started splitting out the teams, the sales, marketing, support. We closed our first six-figure deal. That took us another 5 years to figure out how to do that again, by the way. But that was pretty cool. So really, just some takeaways here. Always think about differentiating your product. Always. Never forget that. You have to be different in some way, and you need to know what that is, and make sure that you let your customers know. Don't waste time fundraising. I can remember spending one evening. I drove to Boston, went to some VC angel group, and kind of figured out what they were looking for, and I wasn't for them. I was pretty proud that I had like $500,000 of revenue. They're like, well, can I get a 10x return in 3-5 years? I'm like, well, what do you mean? It wasn't for me. So everybody in this room, you're bootstrapping. If you can avoid raising money, avoid it, definitely. So the other thing that really was key to me to figure out when to hire people is build a cash flow model. You kind of have to be, as a founder, as a bootstrapper, you need to really understand the accounting, the economics of your business. And my Excel spreadsheet has evolved, and I still use it to this day, to really map out and forecast the cash flow in the business and understand when to hire. So basically, when our run rate would support a new employee for 2 months, I would hire that employee. So I would invest back in the business and continue to hire as fast as possible when my cash flow could sustain it. I mentioned before, automate your processes. I was talking to Peldi actually yesterday. He said he put his best developer on building systems, not the product, but systems. I can't tell you how important that is. At the time, I might have been the best developer, and I was working on that at least 8 hours a day. That's really important. And then at this point, you want to think about keeping your employees really motivated to grow your business. We weren't necessarily the highest paying company, maybe in the area, but certainly not when it comes to a software development organization. So I offered, initially, 15% of the equity I basically gave to the employees in a pool. Used just FYI, a phantom stock program. Don't do that. Do stock options. Because all my employees that were very grateful that they had this had to pay normal income tax, where I paid capital gains when we eventually sold. So next is really the growth phase. I'm going to kind of skip through this. We're now we're hiring like crazy. We moved into a new office. It was actually the same office we're in today, about 5,000 square feet. We started figuring out how to monetize existing customers a little bit better, charging for support instead of making it free, really important. Hired an office manager to help with the day-to-day tasks. Let's see, so now 2007, up to 2.8 million. Still hiring a lot of people. We started becoming real profitable. I will show you a key chart here. So this is the average deal size for a new customer from when I started the company through when I sold. And the way that you kind of have to figure out how are you going to scale your revenue. And selling .NET imaging developer toolkits, it has a relatively small niche. There's only so many people out there, developers out there doing this. I mean, it grows, but it's not huge. So to grow my company's revenue, I had to continue adding more value to our products through modules and really increasing price. Never have I gone back on increasing price. I started out at $169 for the core product. That was gone up to like $5,000 plus all these other modules that we sell. And you can see our deal size when we started in the SDK market right around here, or this is when we had our .NET product, so that kind of went up. There was only 1 year that kind of flatlined. I think that was the bad year. And then it keeps on going up. So figure out how you're going to scale revenue. And it might not be adding new customers. It might be just increasing value and price. OK, so now we're at 2008. We're still growing pretty fast. One of the things that my philosophy was always reinvest back in the business. I never really took much out. I pay myself well, but I really, really wanted to get to 5 million in sales. That to me Amy just interviewed me yesterday and asked, why do so few companies sell when they're just a couple million in revenue? And the answer is because it takes the company, the acquiring company, it takes a lot of time and money to hire M&A brokers to buy a company. They don't really want to, quote, waste time on a small $2 million company. You kind of need to have at least, say, a $10 million valuation for it to be worth their time, for the most part. There are exceptions, of course. So I really wanted to keep feeding the funnel and figure out how to continue to grow. And we started flattening out a little bit. So I started thinking that, geez, maybe we need to do something else. Okay, this is where I made a big mistake. So we took our really differentiated technology, which is a zero footprint document viewing technology. It allows you to view your documents really nicely, very fast. You can annotate them in the web without having to download any ActiveX or anything like that. And we saw the SharePoint market was taking off in the enterprise. And they didn't have any document imaging. It's like, this is perfect. This is like right around the time, same thing like when we were in .NET. I can go and apply this there. It's going to be great. It's going to be a whole other line of business. So went all in. I hired a guy to project manage it. Took some of my best developers, put them on that. Spent $2 million in 2 years on this product. Did not make $2 million in 2 years. It did grow faster than .image. But the mistake is this was really a different company. It's a separate company. And the reason is because it's a different market. We're selling to the IT pro, not to the developers. Now, I could have done this, but what I should have done is made it as a second company and probably hired a co-founder or something like that. But I didn't, and ultimately I had to spin this out of the business for me to even sell and for the business to have a reasonable valuation. So there is a key takeaway there. We did some, see the pictures here. We had some cool things. Once you get to over 20 people, it's a lot of fun. We had all these company events. We played volleyball. We had Beer Friday. That was 4:30, Beer 30 we called it. And we would just have a good time. Really good time in the growth of the company. Figured out how to become a manager. I'm certainly, even now, I kind of know how to manage now, but what experience do I have, really? Mechanical engineer, worked 5 years as just an entry-level engineer, that's it. All of this I had to learn on my own. It's not about school here. So sort of the key takeaways here, I talked about a lot of them. Figure out how to scale your revenue. Reinvest in your business, but don't reinvest in a different market. Reinvest in your existing customers. As long as you have existing customers, focus there. Have fun, build your own unique company culture, and figure out how to. You have to. I know Pelti's talking about flat organizations. I don't know. I couldn't do that. About 7 people is the most I could manage. So I needed to introduce managers that were more than just managers. They had produced real results, tactical results. They were also developers. But you kind of have to figure out how to manage them by objectives. So there's plenty of materials on how to do that. Okay, so this is where things get a little rough. By the end of 2008, I mentioned that I was investing in this new product. Well, I have this thing about credit. I was able to, through 2 different banks, I had a $750,000 line of credit. And I used it here and there for various things. But with this new product, I kind of wanted to feed it a little bit, as a startup that needed some extra funding. And starting the end of 2008, I was probably about $200,000, $250,000 into the line of credit. I knew that this financial crisis was going on, but didn't notice really any negative impacts. The end of December, closed out the year. It was a pretty good year. We grew like 25%. It wasn't amazing, but it was still pretty good. And then the sky fell. So January 1st, a switch was turned off. Literally, like towards the end of January, I'm looking at the numbers, like, well, what the fuck is going on? Basically, what happened was that IT budgets, they rebudgeted in January, they were frozen. They were reduced. Nobody was buying any new products for IT, with some just limited exceptions, and that severely impacted us. The first 6 months in 2009, we went from grow to down 25%. And I would always, I was always hiring and I was always spending right on the edge. So this was a problem. I was losing about $150,000 a month. Maxed out another credit, but this one was much, much bigger. It was also personally guaranteed. So that meant not only the business, but my house, my entire lifestyle was tied to this. I get a call from the bank. The bank says, so we're going to have to call your line of credit. You're going to have to pay your debt now. And I've never been so scared. Like, oh my God, I can't. And I must have been totally irresponsible to do this. So I had to make a pretty radical change. And I started reading. There was this article, I don't know, was it Kleiner Perkins or Dan? You probably know it. Basically, they said you need to cut once and cut deep. Get back to profitability. So there was two salespeople that really weren't performing. It was kind of a no-brainer. I should have let them go anyway. They were gone. But then I was looking at the org chart, and I have to cut 25%. Every single person I looked at, I say, cut that person, fire that person. It would have a severe negative impact on the business. We were running pretty efficiently. So, I started thinking outside the box. I really, this is just going to be bad if I have to fire this person or that person. I reduced my salary, and what I ended up doing was, anybody making over $90,000 a year, mandatory 20% salary cut. Anybody making under that, optional 10% salary cut. But I created a profit sharing program. So the difference in what you would have been paid and through your salary cut goes into a profit sharing pool where 50% of profits for the next 18 months will go to pay that back with no upside. So you're in it, just like me. And it actually went over really, really well. Everybody knew that all these companies are having big problems. People are getting laid off. Businesses were failing. So I had the entire company working with me to get out of this hole. And it literally overnight, we went to profitability. The next quarter, we started paying the profit sharing. And at the end of the 18 months, the employees ended up with something like maybe it was a 30% bonus on their normal salary, what they would have been paid, because we got out of this. The other important point was at that time, in January 2009, only 30% of our revenue was recurring. Unfortunately, I didn't have the option of having a SaaS model then. I hope all of you are looking at SaaS models, recurring revenue, because it's huge. And you don't have to worry about this nearly as much as I did. So we made some changes to our licensing, required maintenance, and built up our recurring revenue. So actually, by the time that I sold, we were about 60% recurring revenue. So that had a big positive impact. So, all right, so some takeaways here. I talked about all of these. And I guess the final one, take care of your existing customers. You will still have your customers, so make sure you keep them happy. I've always been about providing amazing support to our customers, and we continue to do that right through this period. Okay, so here we are, 2010. We're back to really strong growth. I said 60% recurring revenue. My balance sheet, we literally paid off that debt within, I think it was 6 months. So it was like $600,000 in debt. We paid it right off. And then I started looking at the business. Well, a couple things. One, Visit, the product I was telling you about, was just dragging all of our profits. If you looked at the company, the valuation as a whole, we were kind of, we went through a stumbling block. It wasn't growing a lot. It wasn't very profitable. What kind of valuation is that if I ever were to sell? Which wasn't the first thing in my mind, by the way. I figured in a few years. So I ended up spinning it out, or putting the process together, spinning it out. I hired a management team. CEO, an advisor actually took it over. I gave up quite a bit of equity to get that out of the business, which made us become very, very profitable. So I did that. The other thing that I did, this is just 2 years ago, is I was looking at acquiring another company. They did about $1 million in revenue. I thought that was a good way. They're in our space. Another way to grow. I was really shooting for how to make $10 million in sales. So that was right before the exit opportunity came. And how am I doing on time, by the way? Okay. So right at the end of 2010, I had an inquiry from a company called Kofax. They are really the leaders in our space, and they basically expressed interest in buying IntelliSoft. And I wasn't ready for it yet. We just got back into the groove. I was in the process of spinning out Visit. We're going to be really profitable again. We had this really cool recurring business model. We were closing deals that were 3-year contracts, $100,000 a year. Things were looking really, really good. But I had to look at this because when you're in a sort of a niche market like this, there's only a handful of companies that would really be interested in buying you. And I'd also been through a pretty rough patch in 2009 that scared the hell out of me. So I started, I think Jason said this yesterday, I started calling all my advisors, trying to figure out what the hell to do. Actually, I called Jason. And if you go back about a year ago, there's a couple blog articles that he wrote that some anonymous person that that you might know what you're talking about. That was me. So Jason really helped me out and made me realize that this is really a personal decision. I kind of have to look at what I want to do, whether I want to become a serial entrepreneur or not. This is my first company, and whether this was enough for me to feel like my family, my kids were pretty set. Ultimately, I decided that this was a good decision and negotiated with Kofax a price and sold the company. So huge, ups and downs. It was insane. Basically, I felt like I was back to starting my company. I worked nonstop through, this was the West Coast company on the East Coast. I was doing stuff on the phone till midnight every night, negotiating with their M&A guy. Oh, it was hard. I thought I was done when I figured out the price of the company, like the overall value, and then came the earn-out. The earn-out negotiation was way harder than the initial negotiation. So you have to do things like go through due diligence. That took quite some time. You had to make sure all the finances, all of your documents were in order. I had a really good team. I had about 3 people that I sort of let inside, let them know that that we're going, looking like we might go forward with this. I could not tell the rest of the company. They're a public software company. If that got out, there'd be like insider trading issues, so that would have been bad. Even though I really wanted to tell more people, I couldn't. So we figured this out. And one of the things I should point out is, in the revenue charts, I'm showing you the cash flow of the business, sales, not revenue, sales. When I transitioned the business to recurring revenue, I pushed a lot of that revenue out, deferred it, which meant that my 2000 revenue, my 2010 sales were like 4.6 million, I think. 2010 revenue was 3.6 million. From my concern, that 4.6, it was there. It was cash I had in the bank, and we already sold it. It made it difficult for the negotiation because they had to look at the valuation of the GAAP revenue, and it ended up having to push more of that in the earn-out than I would have liked. But the good thing about recurring revenue is I knew that I negotiated that earn-out piece so that I would be able to make it. I can tell you a year later, there's no doubt in my mind that will make the full value of the business. So I'm going to show you something that you probably don't see very often from a software company that has done a pretty small exit. I found out 3 days before this was announced that they were going to release all the financial details of the acquisition. I thought, why are you doing that? None of my other people that I know that sold their company had to do that. Not only that, but they made it sound like this was a fire sale, that this was such a good deal that their stock price is going to go up because they found this company and they paid so little for it, and this is how it was written. And this is going to be my permanent record of me selling my company. So I talked to the CEO, and by the way, he has quite the reputation in the industry. Very well respected, but very, very feared for a good reason. He's very successful, by the way. So anyway, I pretty much had to go forward with this. So this is basically I took the good pieces of the press release and put it here. If you really want to read it, I'm sure you can find it. So I sold Italisoft for, my goal, by the way, was to sell my company for more than $10 million. And I can tell you that I managed to do that, at least as long as I don't make any serious big mistakes the next year through the earnout. But it really sounded like I sold it for this, 5.5, because that was a cash up front. And I had just nearly did 5 million in sales. That doesn't sound so good. But part of that were things that were basically guaranteed for me. It's just that they wanted to make sure that that number was as small as possible to appease their shareholders and their board of directors. And ultimately, there's things like I was able to take cash out of the business before I sold. I was happy, and I guess that's all that matters, right? I was able to achieve what I desired. I was successfully started my company without anybody's money except for the banks. And sold for what I thought was a reasonable amount. And now I can go and do something else, do something different. So there's a couple of things here. I didn't expect to sell when I did, but you really need to think about, you might get that offer. You should know what you'd want to sell for, at least have an idea. And even when you do have an idea, when it really comes down to it, it might change. But really be prepared. Go through, make sure you have a good accountant so you have accurate GAAP financials. Also important, if you have a poor performing product, get it out of the business. Make sure that your company is really has good profit and good revenue growth. Make sure you have a CFO, like a part-time CFO. I hired one just in time, actually, maybe 6 months before the offer came, thankfully. Just be prepared. So I guess one final just list of suggestions for all of you that are bootstrapping your company. Just some ideas, things to think about. How to make millions. Don't do B2C. If you're doing B2C, raise money, go to the VCs, go to Silicon Valley, get hundreds, millions of users, and monetize your business that way. B2B, companies will actually spend money in your product. You can grow your revenue by increasing price. It's much, much easier. The hard part is you kind of need to know the business that you're selling to. In our case, developers are a little bit easier. Maybe I could have sold into aerospace. But I guess the second thing, really make sure that you know how to scale your revenue. Price is in adding new features or value, I should say, to your product is a really good way to do that. Make sure you spend time automating your systems. Monetize your existing customers. Don't create a whole new market. I told you about that experience. Hire for your weaknesses. So we all, we're pretty much, as a CEO, founder, we're generalists. Hire specialists to fill in behind you and what you're weak at. And the other key thing is you have to decide whether you're a product company or a service company. I don't know anybody who's been successful doing both. I have a friend who grew a $25 million service company. He's doing great. And I have lots of people I know that have grown very successful product companies. But if you do both, it's just not going to work. So that's really it for my presentation. I really want to open up this for questions. I hope we have time.
Yep, we have time for a couple of questions.
Okay. Go ahead.
Just a quick question. Your last point, product versus service.
Yeah.
Were you guys a product or service?
Oh, we're a product. So Imaging SDK was a product. We packaged it. We didn't provide any services. We just provided really good support.
I see.
So if you're building your application, you'll maybe call us to say, I have trouble with this part of your product or that part of your product, and we would help.
Okay, so you're a product, but with good customer support.
With good customer support, yeah.
An earnout, I imagine that might be a question. Some people might not know what an earnout is.
Yeah, so an earnout basically, if the company is buying you, has one idea evaluation, you have another idea evaluation, an earnout is a way to sort of bridge that gap. Another good way to appease your shareholders by showing that the actual cash up front is less. It's basically you have to meet certain goals. One of the very large goals is a basically a new feature that we've been building for the company, and it will also benefit us. I should also say, I didn't mention this, that one of the reasons why I wanted to sell to Kofax and not a competitor, because I had that option, was that a competitor would have just decimated the company. They would have fired everybody. It's too much overlap. Kofax, they really had a use for our technology. So I sold to them, but we've been able to keep the business running autonomously. We're continuing to grow. We've hired more people. We went down to 20 when we spun out Visit, but we're back up to 25. And it allowed us to basically, most of the employees their job has not changed. Mine has, but most everybody else is really doing the same thing they did before. Patrick?
How long, I assume there was part of that negotiation is you had to stay an employee of Kofax for a certain amount of time. How long is that? And then it sounds like you have no intention of leaving because of the autonomous thing.
Oh, I do have an intention of leaving.
Then, correct me, can you give us just your details and thoughts on that?
It's actually not an employment contract because you have to be careful with taxes and so forth. I prefer capital gains as opposed to income. But I need to make sure that we meet our goals, so it's really my best interest to stay employed. The period of time, the announcement, we actually closed the end of May last year. September 2013 is when it's finally done. Although I will say that my job has gotten much, much easier because we are totally blowing away our goals. So it's kind of nice to be able to do things like this. I still have a quote, full-time job, but I'm able to take time out for other things, advise other people, do more things that I want to do with my time. So.
Your goal was to sell for 10 million. Do you think if your goal had been 20 million, you would have gotten 20 million?
No. Not at that point. If I waited 2 years, yes. And that was a big question I had. I put the roller coaster picture there for a reason. I could get in. I could spend hours talking about this. Depending on the day, I was going to not sell or to sell. I drove my wife totally nuts. Right up until the day, I think 3 days before the announcement, I was walking away. It was just a total roller coaster. It really came down to how confident I was, and whether I wanted to keep doing this, and what would make me happy, what would satisfy me as to take the next step in my career. So, and I will say that I was burnt out. The thing that I don't know if I regret, but I never was able to go forward with that acquisition that I was telling you about. I was looking at buying a company for a couple $1 million. I was gaining up cash, and I would have been able to do that. I bought some other smaller companies, but nothing that substantial. The reality is, if I went forward with that, it was adding way more risk to my business. If I spent $2 million on this business that I wasn't sure was going to work, or I could mitigate all my risks by taking it all off the table. And I chose to take it off the table.
Over here. So I'm noticing a trend with a lot of the speakers here that most of you have kids or are about to have kids. And you mentioned kind of, maxing your credit cards and then having a child, and now you have two. Do you have any advice for those of us who, have a supportive spouse and kids, and how you kind of manage the ups and downs?
I think a supportive spouse is a requirement. My wife definitely let me, she believed in me and let me do my thing, and didn't have a lot of family time the first year or so. I think I made up for it, but it's hard. It's hard with kids. I will say that the thing that kept me up to 2 a.m. is I was the one that fed my daughter at 2 a.m. every night, and so that kind of made sense. Yeah.
We have time for one more.
Hi. So we actually got an acquisition offer from a company a few years ago, and the perception is that in a term sheet, there's very little that can actually do real damage. But I was surprised to find that there were some things in there about if the deal fell through, that we would actually be responsible for the acquirer's legal costs. Is there anything that you would identify that people should keep an eye out for?
In a term sheet. Well, I certainly didn't have that provision in a term sheet. Oh boy. You know, you start out with a, basically you first have to come up with the business terms, and that's really what matters in terms of negotiation. When it comes to the term sheet, I mean, it was like 30 pages long. You really need to find a really good attorney that's done this before. And I managed to do that. It was a good firm that I use in Boston, and pretty much just going through and making sure there's no gotchas in there. Most of my issues were in the earnout. The cash was pretty straightforward. It was pretty complex, in terms of what things I could do. I needed to keep autonomy in the business. So what if they told me to do something that I didn't agree with? Go to arbitration. I could say that if we didn't, I don't know. There's various things that that you have to keep your eyes out for. But I can't think of one in particular, other than I wouldn't sign one that says that I would pay for the legal expenses.
Great. Thank you, Bill.
Okay, and I'll be around tonight. So thank you.